From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 4th, 2018. Today we're taking a look at the EURUSD, the euro versus the US dollar for today's trade analysis. First things first, here on the euro daily time frame, we see the currency pair has been in a downtrend. We've seen the US dollar having such a tremendous couple of weeks, the rising of the US dollar, the appreciation of the US dollar, pressuring the euro dollar lower, as we've seen that over the past several weeks along the black trend line and pushing all the way down here towards the 1.1500 level. Now, in spite of positive US NFP on Friday, in spite of positive US sentiment, we see a little bit of a pullback happening. Correction maybe, but a pullback happening for the US dollar as we see it bouncing off of support and now challenging resistance at 1.1730. We're now pushing above the black trend line, above the what was a downtrend, and potentially breaking through a significant resistance level. Look back along 1.1730, the top of the blue shaded area. You see historical support back here where the black circle is. So support back here offering us a clue to future resistance into the 1.1730 level. So this is a critical decision point. As we know, if the trend continues to pull back and we see a change of the trend, we could look for the breakout above 1730 and a push. Well, if you look back here where the black circle is, a push above the blue zone at minimum takes it back to the purple shaded area. If the US dollar does start to become stronger again, if the pullback stops and we see the US dollar appreciate again, we could look for resistance and a return to the downtrend. But at least at the current moment, it doesn't look like that is what's going to happen. It looks more likely a potential breakout of 1.1730. Something else interesting about this is I took Fibonacci retracement measurements from the top of the black trend line, way up here at the top, down to the low. So Fibonacci high to low of the black trend puts the 0.236 Fibonacci retracement level at 1.1723. That's the top of our blue shaded area, dashed blue line sitting there. So that's where the current market price is. 382 or 0.382 Fibonacci retracement level of that same trend range sits at the purple zone. So clearly a break of that Fibonacci, a break of the historical support that is now resistance, a break of the black trend line, is possible. We see a surge all the way back up here into the low to mid 1.18s and the purple shaded area. But the clear point to that is that we need it to break here. We can't assume it's going to break here. We want it to break here before we look for an opportunity to take the trade. 4-hour time frame doesn't really change it. Again, we see it challenging and testing. Look at this. It's not anything new really for this to challenge this area. We saw it here. We've seen it even back here on the left, right here. And we even see a challenge. Once it got underneath the blue zone, it began using this area as resistance here. So we see three instances really where it came up, resistance fell, came up, resistance fell, came up, resistance fell. So here we are again. We don't want to assume that this is going to be the breakout. Just because we have this feeling that the US dollar is having a correction phase or a pullback phase, we don't want to assume that. We want real evidence of that. So we need it to really significantly get above this 1.1730 level. Once it does that, once it breaks out above it, then we often will look for it to dip back down to it as support, kind of confirming that level as a barrier of support and resistance, and then we look for that next move back to the purple shaded area for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.